Based on the historical data and forecast, Bitcoin has shown a fluctuating trend with a recent downward bias. The RSI consistently remains below 50, indicating a generally weak momentum. The forecast for the next week suggests a continued downward trend, with prices potentially reaching as low as 62500. Given these factors, I propose a short selling strategy targeting a potential bounce from the support level of 66,400. Our entry price will be $66,400, with a stop loss set at $68,800 to protect against a potential reversal. The initial target price will be $62,500, aligning with the lowest forecast price. To refine this strategy, we'll incorporate the Bollinger Bands. The current price is below the lower band, reinforcing the potential for further decline. We can also consider a second target price of $60,200, based on the bottom of the Bollinger Bands from February 12, 2026. This combined strategy aims to capitalize on the current downward trend while incorporating risk management techniques to minimize potential losses. The RSI also indicates that the asset is oversold, so it can be a good opportunity to short. Based on the historical data and forecast, Ethereum is exhibiting a downtrend. The RSI consistently remains below 35, indicating an oversold condition, particularly around 30.5. The forecast data projects further declines, reaching as low as 1710. Combining these signals, I recommend a contrarian strategy targeting a potential reversal. We'll initiate a long position at $1,880, coinciding with the first forecast price. A stop loss will be placed at $1,710, aligning with the lowest point in the forecast, to mitigate potential losses if the downtrend continues. Our initial target price is $1,990, based on the recent historical high. To refine this strategy, we'll incorporate the Bollinger Bands. The current price is nearing the lower band, reinforcing the oversold signal. If the price bounces off the lower band and shows signs of upward momentum, we can adjust our target price to $2,040. This combined approach, leveraging the oversold RSI, the downtrend confirmation from the forecast, and the Bollinger Bands, offers a balanced risk-reward profile. The strategy aims for a quick profit during a potential short-term bounce while protecting against further downside with a well-defined stop loss. Based on the historical data and forecast, XRP has been exhibiting a downward trend, with recent forecasts suggesting further decline. The RSI consistently remains below 50, indicating a weakening momentum, and has recently dipped close to the oversold level of 20. The Bollinger Bands are also contracting, suggesting increased volatility and potential for a significant price movement. Considering this, I recommend a short selling strategy targeting a potential bounce from the support level of $1.37. Enter a short position at $1.4, with a stop loss placed just above the recent high of $1.51. The initial target price is set at $1.32, aligning with the forecast price and the lower Bollinger Band. To refine the strategy, we can incorporate the RSI and Bollinger Band signals. When the RSI dips below 30, indicating an oversold condition, and the price touches the lower Bollinger Band, it suggests a potential rebound. However, given the prevailing downward trend, I would still prioritize the short position. If the price falls to $1.36, enter a short position with a stop loss at $1.40 and a target price of $1.24. This combined approach leverages both technical indicators and the overall market trend for a high probability, high return investment. Based on the historical data and forecast, BNB exhibits a clear downtrend. The price has been consistently below the upper Bollinger Band and approaching the lower band, indicating increasing volatility and potential for further decline. The RSI consistently remains below 30, confirming the oversold condition, but also suggesting a potential for a limited bounce before the downtrend resumes. The support price of $604 provides a floor, while the forecast predicts a continuous decline toward $547. Therefore, my strategy is to implement a short position. I recommend entering a short position at $607, placing a stop loss order at $632, just above the recent resistance level. The initial target price should be $587, aligning with the first day of the forecast. To refine this strategy, I will incorporate a trailing stop loss. If the price retraces to $619, I will adjust the stop loss to $619. If the price continues to decline and reaches $587, I will move the target price to $567. If the price falls further and breaks below $567, I will adjust the target price to $547. This dynamic approach allows us to capitalize on the downtrend while minimizing potential losses. The combination of a short position, a carefully placed stop loss, and a trailing target price provides a robust strategy for potentially high returns in the current market conditions. Based on the historical data and forecast, Solana shows a downtrend with significant volatility. The RSI consistently remains below 30, indicating oversold conditions. The forecast prices continue this downward trend, suggesting further potential for losses. Given this, a contrarian strategy focusing on short positions during periods of extreme oversold conditions appears promising. I recommend a short position when the RSI drops below 20. Entry price should be $70.9, with a stop loss placed just above the upper Bollinger Band at $104. The target price for this short position should be the support price of $81.6, aiming to capitalize on the anticipated price rebound. To refine this strategy, I suggest combining it with Bollinger Band analysis. When the price touches the lower Bollinger Band and the RSI is below 20, it signals a potential shorting opportunity. If the price approaches the upper Bollinger Band while the RSI is above 80, consider covering the short position. This combined approach helps manage risk and optimize returns. Therefore, the final portfolio will be a short position with an entry price of $70.9, a stop loss price of $104, and a target price of $81.6. This strategy balances risk and reward, leveraging both RSI and Bollinger Bands for informed decision-making. Based on the historical data and forecast, TRON shows a slight upward trend. The RSI consistently hovers between 34 and 50, indicating neither strong overbought nor oversold conditions for most of the period. However, the recent climb towards 50 suggests increasing upward momentum. The Bollinger Bands have been narrowing, indicating a period of consolidation, but the forecast prices are consistently above the center band, reinforcing a bullish outlook. Therefore, I recommend a moderately bullish strategy. We will initiate a long position at $0.283 with a stop loss set at $0.279, just below the established support level. Our initial target price will be $0.29, aligning with the forecast price for February 26, 2026. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI dips below 34, indicating an oversold condition, we will consider entering a long position at the prevailing price, with a stop loss just below the lower Bollinger Band. Conversely, if the RSI exceeds 80, suggesting an overbought condition, we will consider exiting the existing long position or initiating a short position. The upper Bollinger Band will serve as a secondary target price. For example, if the price reaches $0.29 and the RSI is below 80, we might extend the target to $0.295, near the resistance level, provided the price remains above the center Bollinger Band. This combined approach balances the momentum of the upward trend with reactive adjustments based on RSI and Bollinger Band signals, optimizing for high returns while managing risk. Based on the historical data and forecast, Dogecoin shows a downtrend with increased volatility. The RSI consistently remains below 50, indicating a bearish sentiment, with values frequently dipping below 30, suggesting oversold conditions. The Bollinger Bands have widened, confirming the increased volatility. The forecast prices for the next week are also slightly decreasing, reinforcing the downtrend. Considering these factors, I propose a short-selling strategy with a focus on capitalizing on potential downward movements. The entry price will be $0.0947, coinciding with the forecast price for February 26, 2026. The stop loss will be set at $0.0971, just above the forecast price and the recent high of $0.0985 to limit potential losses if the price unexpectedly reverses. The target price will be $0.0891, aligning with the forecast price for February 26, 2026, offering a reasonable profit margin. To refine this strategy, I will integrate the RSI and Bollinger Bands indicators. When the RSI falls below 20, oversold, it suggests a potential bounce, but given the overall downtrend, this will be a temporary correction. Therefore, I will enter short positions when the price touches the lower band of the Bollinger Bands and the RSI is below 35. The stop loss will remain at $0.0971, and the target price will be $0.0891. This combined strategy leverages the volatility indicated by the Bollinger Bands and confirms the bearish sentiment with the RSI, resulting in a high-return investment. Based on the historical data and forecast, Bitcoin Cash shows a slight upward trend, with support around $553 and resistance around $569. The RSI fluctuates between 40 and 54, indicating neither strong overbought nor oversold conditions. The Bollinger Bands suggest periods of volatility, with the price occasionally touching the upper and lower bands. Given this information, I propose a combined strategy leveraging RSI and Bollinger Bands. We will initiate a long position when the RSI dips below 40, indicating an oversold condition, and the price is near the lower Bollinger Band. The entry price will be $552. A stop-loss order will be placed just below the lower Bollinger Band at $548 to limit potential losses. The initial target price will be the resistance level of $569, offering a substantial profit. To refine the strategy, we will incorporate the forecast data. The forecast predicts a price increase, with values hovering around $563 to $571. Therefore, upon reaching the initial target price of $569, we will move the stop-loss to the entry price of $552, securing profits and protecting against a potential reversal. If the price continues to rise, we will set a second target price at $571. This combined approach, utilizing RSI for entry signals, Bollinger Bands for confirmation, and forecast data for profit-taking, aims to maximize returns while managing risk effectively. The final portfolio will be 60% long position and 40% cash. Based on the historical data and forecast, Cardano shows a downtrend with increased volatility. The RSI consistently remains below 50, indicating a bearish sentiment. The recent forecast prices further support this trend, showing a gradual decline. Considering the RSI reading of 40.9 on February 19, 2026, and the proximity to the support level of $0.256, a short position is warranted. The entry price for this short position will be $0.273. A stop-loss should be placed slightly above the recent high of $0.295 at $0.298 to mitigate potential losses if the price unexpectedly reverses. The initial target price will be the support level of $0.256, offering a reasonable profit margin. To refine the strategy, we will incorporate the Bollinger Bands. The price has been trading near the lower band, suggesting potential for a further decline. If the price breaks below the lower Bollinger Band of $0.249, a second target price of $0.248 can be considered. This layered approach allows for capitalizing on the ongoing downtrend while managing risk effectively. The overall portfolio will allocate 60% to this short position, 30% to a stable coin like USDC, and 10% to a long position in a promising altcoin with strong fundamentals to diversify and potentially capture upside gains. Based on the historical data and forecast, Chainlink demonstrates a downtrend with increasing volatility. The RSI consistently hovers below 35, indicating oversold conditions, particularly between February 13 and February 19, where it dipped as low as 28.9. The Bollinger Bands show that the price has been trading near the lower band for a while, suggesting potential for a bounce. Considering these factors, I recommend a contrarian strategy focusing on short-term gains. We will initiate a long position at $8.18, coinciding with the forecast price on February 24, when the RSI is expected to be significantly oversold. A stop-loss will be set at $7.85 to protect against further downside risk. The initial target price will be $8.94, based on the recent resistance level and a potential rebound. To refine this strategy, we will incorporate a dynamic target adjustment based on the RSI. If the price reaches $8.94 and the RSI exceeds 60, we will move the stop loss to $8.57 and set a new target at $9.6. This adjustment aims to capture additional gains if the upward momentum continues. However, if the price fails to reach $8.94 and the RSI remains below 40, we will exit the position at $8.41, minimizing losses. This layered approach combines technical indicators and support/resistance levels to maximize potential returns while managing risk effectively. This portfolio will be 60% RSI strategy, 30% Bollinger Band strategy, and 10% support and resistance strategy. Based on the historical data and forecast, Plasma shows a volatile trend with periods of consolidation and upward movement. The RSI consistently remains below 50, indicating a generally weak sentiment. The recent price action has tested the resistance at $0.102, but has not sustained above it. The forecast for the next week suggests a downward trend, starting near $0.0868 and declining to $0.078. Given these factors, I recommend a short-term contrarian strategy. We will initiate a short position at $0.0868, anticipating a pullback towards the support level of $0.0812. The stop loss will be set at $0.0925 to protect against a potential upward reversal. The target price is $0.0812, aiming for a quick profit from the anticipated downward movement. To refine this strategy, we'll incorporate Bollinger Bands. The price is currently near the upper band, suggesting a potential for a correction. If the price breaks above the upper Bollinger Band, we will exit the short position and consider a long position near the lower band. Specifically, if the price reaches $0.0923, we'll move the stop loss to the center of the Bollinger Bands, around $0.0925. If the price falls below the lower band, we will enter a long position at $0.078, with a stop loss at $0.0752 and a target price of $0.0881. This blended approach combines the RSI signal with the Bollinger Band's volatility indicator to maximize potential returns and mitigate risk. Based on the historical data and forecast, IOTA is currently in a downtrend, showing consistent lower highs and lower lows. The RSI consistently hovers between 33.7 and 44.4, indicating a neutral to slightly bearish momentum. The forecast data suggests continued downward pressure, with prices ranging from 0.0657 to 0.0607 over the next week. The support price of 0.0647 provides a potential floor, while the resistance at 0.0832 remains distant. Given these factors, I recommend a short selling strategy with a focus on capitalizing on the predicted downward movement. Our strategy involves entering a short position when the RSI falls below 30, signaling an oversold condition and a potential reversal. Currently, the RSI is above 30, so we will wait for the RSI to reach below 30. Let's assume the RSI reaches 28. The entry price will be $0.0657. We will set a stop-loss order at $0.0687, just above the recent resistance level, to limit potential losses if the price unexpectedly reverses. The target price will be $0.0607, aligning with the lowest forecast price. This strategy aims for a high return, short-term trade capitalizing on the anticipated downward trend, with risk management measures in place to protect capital. Based on the historical data and forecast, Aster shows an overall upward trend, consistently testing and bouncing off the support price of $0.686. The RSI fluctuating between 42.3 and 61.4 indicates periods of both oversold and overbought conditions, but generally trending upwards. The Bollinger Bands have been widening, suggesting increased volatility and potential for price movement. Considering these factors, I recommend a long-term investment strategy focused on capitalizing on the upward momentum. I suggest entering a long position at $0.726, placing a stop-loss order at $0.686 to protect against potential downside risks, and setting a target price of $0.757 for a moderate profit. To enhance returns and manage risk, I propose a layered approach integrating RSI and Bollinger Band signals. When the RSI dips below 30, consider entering a long position at $0.734, with a stop loss at $0.686 and a target price of $0.751. Conversely, when the price touches the upper Bollinger Band, consider taking profits or reducing position size. This combined strategy aims to capture gains from both trend following and momentum-based opportunities, optimizing returns while mitigating potential losses. The final target price should be $0.757. Based on the historical data and forecast, TRON shows a slight upward trend. The RSI consistently hovers between 34 and 50, indicating neither strong overbought nor oversold conditions for most of the period. However, the recent climb towards 50 suggests increasing upward momentum. The Bollinger Bands have been narrowing, indicating a period of consolidation, but the forecast prices are consistently above the center band, reinforcing a bullish outlook. Therefore, I recommend a moderately bullish strategy. We will initiate a long position at $0.283 with a stop loss set at $0.279, just below the established support level. Our initial target price will be $0.29, aligning with the forecast price for February 26, 2026. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI dips below 34, indicating an oversold condition, we will consider entering a long position at the prevailing price, with a stop loss just below the lower Bollinger Band. Conversely, if the RSI exceeds 80, suggesting an overbought condition, we will consider exiting the existing long position or initiating a short position. The upper Bollinger Band will serve as a secondary target price. For example, if the price reaches $0.29 and the RSI is below 80, we might extend the target to $0.295, near the resistance level, provided the price remains above the center Bollinger Band. This combined approach balances the momentum of the upward trend with reactive adjustments based on RSI and Bollinger Band signals, optimizing for high returns while managing risk. Based on the historical data and forecast, Pump.fun shows a downtrend with recent price volatility. The RSI consistently hovers below 50, indicating a bearish momentum, although it briefly crossed 50 on February 18. The Bollinger Bands show that the price is currently near the lower band, suggesting potential for a bounce. However, the forecast for the next week predicts a further decline, with prices falling to 0.00186. Considering these factors, I recommend a contrarian strategy focusing on short-term opportunities. My recommended strategy is to initiate a long position at $0.00203, coinciding with the forecast price on February 23, 2026. Given the recent downtrend and the support level at $0.00184, I set a stop loss at $0.0018, providing a buffer against further declines. The target price is set at $0.00233, aligning with the recent resistance level. This strategy aims to capitalize on short-term bounces while mitigating risk with a conservative stop loss. The RSI is at 37.3, which is in the oversold range, further supporting a potential bounce. If the price breaks below the support level of $0.00184, I will close the position and reevaluate the market trend. Based on the historical data and forecast, DECRED shows a fluctuating trend with support at $19.8 and resistance at $26. The RSI fluctuates between 51.2 and 70.8, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increased volatility. My recommended strategy is a combination of RSI and Bollinger Bands. We will initiate a long position when the RSI dips below 55.0 and the price touches the lower Bollinger Band, indicating a potential oversold condition. For example, on February 14, 2026, the RSI was 51.2 and the bottom of the Bollinger Band was 17.3. Therefore, we enter a long position at $17.3, set a stop loss at $16.6, and aim for a target price of $23.1. To refine this strategy, we will incorporate the forecast data. The forecast suggests a slight downward pressure initially, with prices hovering around $23.7 to $23.2. Therefore, we will adjust the entry criteria to be more conservative, requiring both the RSI to be below 50.0 and the price to be at or below the lower Bollinger Band. On February 25, 2026, the forecast price is $23.2, and if the RSI is below 50.0 and the price touches the lower Bollinger Band, we enter a long position at $23.2, set a stop loss at $22.5, and target a price of $26. This combined strategy aims to capitalize on short-term price fluctuations while mitigating risk through strategic stop-loss placement and utilizing the resistance level as a profit target. Based on the historical data and forecast, Virtual's protocol has shown a downtrend overall, but with some volatility. The RSI consistently remains below 50, indicating a bearish sentiment. The forecast data suggests continued downward pressure, with prices fluctuating around the $0.58 to $0.59 range. Considering the support level at $0.61 and the Bollinger Bands, I recommend a contrarian strategy focusing on short-term bounces. We will initiate a long position when the RSI reaches an oversold level below 30, and the price touches the bottom of the Bollinger Bands. Specifically, let's target February 26, 2026. The forecast price is $0.539, and the bottom of the Bollinger Bands is $0.524. We will enter a long position at $0.53. The stop loss will be set just below the bottom of the Bollinger Bands at $0.51 to limit potential losses. The target price will be the nearest resistance level, which is $0.61, providing a potential profit of $0.08. This strategy combines RSI and Bollinger Bands to identify potential short-term reversals, capitalizing on volatility while managing risk with a defined stop loss. Based on the historical data and forecast, Terra Luna Classic shows a generally sideways trend with consistent support around $0.0000338 and resistance around $0.0000365. The RSI fluctuates between 38.8 and 51.4, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price has been trading within a relatively narrow range. Considering this, I recommend a short-term, range-bound trading strategy. Specifically, when the RSI dips below 30, indicating an oversold condition, enter a long position at $0.0000338. Set a stop loss slightly below the lower Bollinger Band at $0.0000325 to protect against unexpected downside moves. Target a profit near the resistance level at $0.0000365. To refine this strategy, I suggest incorporating the Bollinger Bands. When the price touches the lower Bollinger Band, indicating potential for a bounce, enter a long position at $0.0000330. Place a stop loss just below the lower band at $0.0000325. Set a target price at the middle of the Bollinger Band, which is $0.0000355. This combined approach leverages both RSI and Bollinger Bands for enhanced precision. The portfolio will prioritize the Bollinger Band strategy for its responsiveness to short-term price fluctuations, with the RSI strategy as a secondary confirmation. This approach aims to capitalize on the current range-bound market conditions while mitigating risk through strategic stop-loss placement. Based on the historical data and forecast, Injective exhibits a downtrend with consistent declines in recent days and a forecast predicting further drops. The RSI consistently remains below 37, indicating oversold conditions, and the Bollinger Bands are narrowing, suggesting increased volatility. Given these factors, I propose a contrarian strategy focusing on short positions. We will enter a short position at $2.93, capitalizing on the anticipated downward movement. A stop loss will be set at $3.19 to protect against unexpected upward spikes, and the initial target price will be $2.87, aligning with the forecast. To refine the strategy, we will incorporate the RSI and Bollinger Bands. When the RSI reaches 20 or below, indicating a strong oversold condition, we will consider entering a long position. Conversely, when the price touches the lower Bollinger Band, it signals a potential rebound. However, with the prevailing downtrend and negative forecast, our primary focus will remain on short positions. If the price rebounds to $3.1, we will exit the short position and reassess the market conditions. This dynamic approach, combining technical indicators with trend analysis, aims to maximize returns while mitigating risks. Based on the historical data and forecast, Kite demonstrates a generally upward trend with volatility. The RSI consistently fluctuates above 60, indicating bullish momentum, and occasionally reaching overbought territory above 75, suggesting potential for a pullback. The Bollinger Bands show price movement within a defined range, with the recent price nearing the upper band, implying potential resistance. Considering this, I propose a strategy focused on capitalizing on upward momentum while managing risk. I recommend a long position entry at $0.236, coinciding with the first forecast price and the recent upward trend. A stop loss should be placed at $0.227, just below the lower Bollinger Band from February 19, 2026, to protect against a sudden downturn. The initial target price is set at $0.261, aligning with the highest forecast price and providing a reasonable profit margin. To refine this strategy, I will incorporate RSI signals. If the RSI drops below 30 during the forecast period, indicating an oversold condition, a buy signal is triggered at the current price. Conversely, if the RSI exceeds 70, suggesting an overbought condition, consider taking profits or tightening the stop loss. The final portfolio combines the initial long position with dynamic adjustments based on RSI readings. The strategy aims for a balance between capitalizing on the upward trend and mitigating risk through strategic stop-loss placement and RSI-driven adjustments, maximizing potential returns while minimizing downside exposure.